All right, well, good afternoon, wherever you may be watching from. My name's Nate Hamblin. This is Nate Zimmerman. We have the pleasure of serving our churches here at the FEC office. And we're going to do a very brief webinar this morning, or actually this afternoon, although maybe if you're in the mountain time, it's this morning for you, about our retirement savings plan. It's probably one of the best or one of the greatest tangible resources we offer our ministry credentialed personnel. We have over 200 participants in that plan, and so there's just a few things we want to go over with you. We hope that it'll only be about 10 to 15 minutes of content, and then we're going to open it up for some questions and answers. You should see a phone number, if you don't see it already, shortly on the bottom right of your screen, that if at any point you have questions about anything we're covering, feel free to text the number on your screen, 260-918-0868. So at any time, if you have a question, just text 260-918-0868. We'll probably hold most of those questions to the end, but you can send those in real time, and we have someone collecting those for us. So really the three topics we want to cover today all have to do with our retirement savings plan. We're going to look at the plan document, some changes that have been made to it. We know that some of you are participants, you are those credentialed workers, and then some of you are probably the plan managers, for lack of a better term, at the local church. And so we'll probably speak to both of you at different times in this portion. So we want to make sure that both of you are aware of some plan document changes, as well as a new acquisition to who holds our retirement plan. And then finally, we'll go over some of the specific contribution updates for 2025. So I'm going to be asking questions. Nate is the one with all the answers. So Nate, go ahead and get us started with some of the updates to our plan documents.
Sounds good. So really, why did we do plan document updates? One, our plan document was actually dated back to 1/1/2015.
Okay.
So just from a time standpoint and lots of different amendments, it was time to bring all those amendments together. The other was that the IRS has come down and it's called Secure Act 2.0, and they're just constantly making changes to what are some of the requirements or guidelines that we have to adhere to. And so as we looked at all the amendments and then the guidelines that had to be done, we thought a restatement made sense. And so the restatement is going to be effective January 1st, 2025.
Okay.
And so we actually have two plans, and both of those plan documents were updated. What we're going to be talking about today is really specific to the FEC plan for our credentialed workers and our affiliate staff.
Okay.
And so as we talk through this, just understand there are two plans. We're really honing in on one.
Okay.
So if you want to bring up the slide that kind of shows all the different topics that we're going to run through real quickly, that'll be available after the webinar. So you can look at those more closely. So what are some of the major highlights to our plan update? The first one was that we moved from calculating hours worked to elapsed time as we evaluate our eligible employees and then also our vesting accumulation. So moving it from hours worked to elapsed time.
And I'm going to be the first one to ask a question.
Okay.
What in the world do you mean elapsed time? What does that mean?
Exactly. So elapsed time really is saying that if you work an hour in a given month, you get credit for working that hour.
Okay.
And so now we're just basically saying every 12 months you get a year of service.
Okay.
And we're not tracking hours worked. We're just saying if I worked at all in a given month, I get credit for 1 month.
Okay.
Yep.
Great. That makes sense.
Okay. So in order to make that move, what we had to do, and we're actually happy to do this, but every active participant in our plan as of 12/31/2024 will become fully vested.
Okay.
So even if you enrolled October 1 of this year, you will be fully vested, which is normally a 5-year, 20% a year accumulation. So we're actually really happy. That allows us to be more generous.
Yeah. Well, and for a lot of our younger credentialed, or newer, I shouldn't say younger,
yeah.
our newer credentialed personnel, they're not waiting and trying to scale up. If you're in, you're in. So
Yeah.
that's fantastic.
Yeah.
Great.
And just a quick comment on vesting. Basically, that's talking about your ownership of the employer contributed funds in your retirement account. your money that you contributed is always yours, and where the vesting is looking at employer-funded portions. So lapse time, fully vested as of 12/31. We added a new, it's called an excluded class. So I just said we're not tracking hours, but if you have an employee at your church or you are working 10 hours or less, you can still make your own individual contributions, but FEC will not match, and your church is not required to make the church contribution.
Okay.
It's an excluded class.
Gotcha. So we're not tracking hours, but in order to be eligible to be fully vested, you need to be 10 hours or more a week. Got it. Okay.
We changed the way that we reallocate our forfeiture account. And forfeitures is a fancy word to say that if someone stopped working at FEC that didn't have full vesting, that money goes into an account, and we then divvy that out to our participants, our plan participants.
Which is really cool because I remember this discussion. We sort of had the choice, and our plan managers was like, what do you want to do with that extra little income? Do you just want to offset your administrative costs of the plan, or do you want to give that to your participants? And there was a little discussion, but that's a pretty easy choice for us because the heartbeat of this is to be an asset to our credentialed workers. So rather than try to offset some administrative costs, we just divvy that up and distribute that among all active participants.
Exactly.
Is that correct? Yeah, that's great.
Historically, we had done that divvying back out based on years of service.
Okay.
We changed the factor to those who had actively participated in the prior year.
Great.
So if you're making an individual contribution and you're getting a match, you'll receive some of that forfeiture reallocation.
That's great. That's great.
And then the last thing, and this is new, we added the Roth deferral last year, but we weren't able to do in-plan Roth conversions. So Nate, I've made all these pre-tax contributions. I really want them to be as Roth. Can I make a Roth conversion? Yes, you can now do that. You have to be an active employee and you have to be fully vested.
Okay.
But you are able to do in-plan Roth conversions now. Note, there are tax ramifications to doing that.
Right.
And so you may want to engage with your financial planner or your tax planner before you fully do that.
So those are sort of the high level notable changes of what's different from our plan now, or will be different starting January 1 versus what it has been since 2015.
Correct.
Beautiful.
That's correct.
Beautiful. All right, tell us about this new acquisition.
Yeah, so the new acquisition, if you want to bring it up, effective January 1st, One America has been bought by Voya Financial.
Voya. I've been waiting to do that all day. Voya. You all know the commercial. Now you can't get it out of your head.
That's right. So the orange squirrels, you've seen the Voya Financial, and frankly, this is a really big deal. It's a good thing for our plan. We're very excited about this announcement. It didn't catch us by surprise or off guard.
Yeah, so I'm glad you said that because my first thought, and I don't think I'm alone, my first thought is wait, if I know their jingle, they're pretty large.
Yeah.
Are we just going to, I'm assuming we're small potatoes, are we going to get lost in the shuffle? And you continue to tell me, no, this is actually good for us. Why are you personally so excited about this move to Voya from One America?
There's multiple fronts. To address your question about are we going to get lost in the shuffle, one of the things that will not change is our administrative team.
Okay.
So in the buyout or the transition, all of the people that I've been working with and helping administer the plan will stay the same.
That's huge.
So there's really no change lost in personnel. The gains that we get, I mean, they're a top 5 company in terms of retirement plans. They have over 60,000 plans that they manage. Okay. They have over 7.9 million in participants within those plans. And so there's a lot of people, there's a ton of assets that they help manage. But one of the things, I was just in a webinar with them, and they really emphasize customer service. Okay. And they're developing a culture where they find people that are passionate about serving the people and the participants in the plan. And so there's a reason that they've gotten to that level, and that they're scalable down to our size.
Good, good. Well, again, so that helps me, and if there's any of you that are a little susceptible of national known chains and those types of things, just hopefully that encourages you as well. I think for me, just knowing that we have our same team and they're not going to clear house and we got to get used to a new way of doing things from a user standpoint, from a familiarity, from a cultural thing, that just really puts me
One
at
other
ease.
couple of things from a plan.
Yep.
This was something I was really worried about. I love the way our plan is built and
Okay.
how much it costs and that type of thing. There will be no change to our contract,
Okay.
no changes to our fees, no changes to our investment lineup. So there just really aren't going to be that many changes at a participant and a plan level. It's just really going to be a logo change.
Yep.
And then at a participant side, you get some increased digital resources, some
Okay.
online resources, and then a better customer service experience
Great.
on the local.
So come 2025, when you get that little envelope in the mail, it's not going to have the One America logo anymore. Now it's going to have the orange squirrels. Well, maybe they don't use the squirrels, but it's going to have the Voya logo. That's good. All right, excellent. Tell us a little bit about just the 2025 contribution updates. This is not new. Every year we reevaluate and say, what's the church contribution? What will FEC match? So just run through those numbers with us.
Absolutely.
And then if you've got questions, be texting those in again, 260-918-0868. All right, go ahead.
Yeah, so every year we intentionally make sure that our benefit is pacing with inflation. And so there's some process by which we do that. The church contribution is moving from $312 a month to $324 a month. For you on the budget planning side, that's $3,888 a year per eligible participant. And then FEC is matching 50% on the individual's first $1,560 of contribution. A lot of people want to know, what's the minimum amount that I have to contribute to maximize the FEC match? And if you take that $1,560 divided by 12, it's $130 of individual contribution to maximize FEC's $65 a month match. If you put all those pieces together, 324 plus 130 plus 65, you as a participant are going to put in $130. $519 a month will go towards your retirement. It's pretty cool. So, yeah, that's just kind of a sprint through the 2025 numbers. And then, yeah, so any questions that you might have?
And I'm going to interject there. So this is something we stress every time we do our new leaders orientation. If there's any plan participants and you're not taking advantage of the match, like that's why we budget $130,000 a year in our operating budget. That's what's in the 2025 proposed budget at this point, because we want to invest those dollars into your future to make sure that you don't get to the end of your time serving the Lord and you're trying to live off peanuts. So take advantage of that match. I just can't stress that enough. So I just think that's important to emphasize.
Absolutely.
All right, is there any other information we need to share? We told them it was going to be quick. That was 10 minutes by my count. Yeah. So any questions that you all have? Eric, have any come in? No, you're shaking your head. All right, 260-918-0868. If there's any questions, we'd love to receive those, and then we'll address them.
So one of the things that I'll just say, obviously the slide deck will be available to you. We are not going to post our plan documents online, but they are available at your request. So just feel free to reach out to myself or anybody that you have contact with here at the office, and we'll get those to you. Okay. And then a link to the official announcement or the news press release for the Voya purchase, we'll make that available online as well. And if you need the 2025 numbers in some sort of format, just reach out. We'll have all those things available online.
And I don't know how soon, but you'll be able to find this webinar if you want to share it with someone else, probably a week or so. You'll be able to find that under the resources tab for individuals. You'll see a logo that talks about a retirement plan, so we can get that out to you. Okay, no questions?
Well, good.
We're going to trust that just means we were that abundantly clear. Oh, I know we got one more thing we want to tell you about. Any questions coming in?
Yep.
All right, go ahead. What is it?
Can you give me an example of how the Roth in-plan conversion works out in real life? I don't understand the words coming out of your mouth.
All right, so Nate, use layman's terms. Okay, layman's terms. to describe how the Roth conversion works.
Yes. So if you think about your contributions, if you haven't been making a Roth deferral, so we're talking about your individual contribution.
Yep.
You deducted them from your payroll. Most of the time you've made that contribution before it was taxed.
Yep.
So the money goes in pre-tax and it grows into the account and it grows tax-free and then you can pull it out. A in-plan Roth conversion is basically saying, I want to pay the tax now,
Yep.
and I want to make my individual contribution and even your employer contributions. I'll pay the tax now and I'll change it into after tax so that at retirement I can pull it out tax-free.
Yep.
We do have the housing provision benefit in our plan, which allows for you to take money out tax-free to a limit of your housing expenses.
Yep.
But let's be honest, I may not have $1,000 or
Exactly. So for the layman's terms, let me
Yes,
spit
you go.
back here. Let me spit
Yeah.
back my understanding, and then you feel free to chastise me and correct me publicly. I have no problem with that whatsoever. So in my case, I still have 2 children at home.
Yep.
And so I get tax credit for those children. And because of my housing provision, I don't make that much money. Well, that's not the only reason I don't make that much money, but because of, okay, I don't make that much money. So it doesn't hurt me at all. It actually works to my advantage to put those funds in the Roth option so that I'm paying tax now. So Lord willing, when that money grows, I'm actually pulling more money tax-free out by paying the tax now because I've already got enough credits to cover it.
Correct.
And so with this conversion, that's only been available to me for the last year.
Correct.
And so now I can go back and say, hey, that money that I've accumulated, some portion of it, whatever, now there's a way for me to say, I'd actually like to pay money on that. I'd like to pay tax on that money I wasn't able to do this with so that later I can pull more out tax-free. That's what you're saying?
That's exactly right. Yep.
Okay.
Yep.
Hopefully that made more sense to our question asker. If you have questions, Nate's great on the phone. Give him a call and he'll be happy to explain this stuff. Any other questions? All right, so I'm going to remind you, since we've got a captive audience, that December 7th is our annual delegate meeting. That's where we go over all the business of the fellowship and review director's reports, review the budget, which I already told you a large portion of that budget is dedicated to getting more money in our credentialed workers accounts. We'll nominate our board members. We'll look for affirmation for those who serve on our general board and our elder board. So that's December 7th. There's a screen on your screen right now where you can see how to register for that. If you personally are not registered, or if you have people from your church not registered, again, anyone who's a credentialed worker of FEC plus up to six additional delegates per church, you choose who they are. You are eligible to be delegates, but anybody who's going to participate in that meeting, because it's a virtual meeting, must register. So use that URL on your screen to register your delegates, and we'll see you on December 7th. Those packets have already gone out, but anybody who registers at this point, you'll get a packet automatically and you'll be all set for the meeting on December 7th. So if we don't see you before then, Merry Christmas. Thanks for all you do to serve at our local churches and through our local churches. And any questions, as always, just call the office or email info@fecministries.org, and we are happy to serve you. Nate, anything else from you?
Thank you for joining.